Hey, what's up, everyone? And I hope you're having a happy Friday. I wanted to take a couple minutes this morning and post a video a little bit about the training program and some of the options that are out there. A number of you that are in this community that have been looking for different programs that are out there, you've probably come across a number of potential programs for trading options. You've probably also seen a number of different programs that are out there that are going to teach you some of the basics and the fundamentals of investing. I just wanted to take a few minutes to talk a little bit about why my program is different. It's not so much that I teach things that you don't learn in school, it's that I'm really trying to help you understand how to apply those. When I talk about expected return or trainer's measure or a covariance matrix, I want people that take my program to understand what those things are and how to leverage them. So essentially, what I've done is I've created this playbook that helps people better understand how to break down some of these methods and apply them on a more personal level. If you're interested in stock selection, we have what we call the five different fundamental metrics, which is expected return, alpha, trainer's measure, Sharp's measure, and then an overall average. That is just as a way to try to help you understand certain statistics that highlight investments to a lot of investors that are leveraging trading algorithms up on Wall Street. It's the type of math that these people are doing in order to try to find the best investment available. What I'm attempting to do is unlock that for everyday people so that you can leverage it when building your own portfolio. So, the first thing that we do is rather than show you a bunch of statistics and numbers, we show you a letter associated with the performance of that asset in comparison to all of its peers for that particular statistic. Now, if you want to understand the math behind that statistic, in my daily videos, I did go through a number of them. You can go back and check those videos. Then I also have a training program that you can pay for that goes a lot more in depth into the math behind all. Then, once you have the assets that you want to pull together, the next thing that a typical finance person is going to do is calculate what's called a covariance matrix, where they're trying to determine the amount of risk that each asset is contributing to that portfolio. That's where the second letter grade comes in, because instead of, again, referencing a number, you're referencing a letter grade, which is very relatable to a lot of people, and it can make it very easy to understand. So you have your initial letter grade to understand how asset is performing against peers. And then you have the secondary letter grade to help you better understand how that asset is interacting with all the other assets that you have in your portfolio. Then from there, we leverage what's called portfolio optimization, which is where you're finding essentially the version of your portfolio or the set of weights that had what's called the highest slope on the capital allocation line, which is just a fancy way of saying it was the portfolio that produced the most return for the least amount of risk. So we want to get you into that portfolio because that portfolio is going to act a lot more like an index fund. You're going to, by having a properly optimized portfolio, you're going to produce a return a lot more like an index. And you're going to be able to stomach the day to day returns even when you're losing money. If you don't believe me, go back and look at the investing series that I did over the last month, and you'll see that even at times when I'm losing money, still very calm and collected because my portfolio is just following what the market is doing, so that I know that it's secure. I'm not going to follow it all the way down to zero. I still have all my money; it's still secure. It was just a matter of okay, are these the right assets? And then after about 2 weeks, I made a change, and then we saw a slight bump and saw a nice increase over and above what the market was producing. And then again, over the last few days, it produced a return that was very similar to the markets. So, by leveraging portfolio optimization, just know that essentially what you're doing is you're building your own personal index fund, and it's a lot like how a hedge fund manager is going to build portfolios for themselves and for their fund. Then from there, the next step is really trying to understand if you want to apply risk aversion. That sort of 60-40 rule is the thing that's always historically out there. And it gets kind of a lot of negative press today among a lot of social media because a lot of people say, well, you're leaving money on the table if you're putting 40% of your money in bonds. Well, if you had done that before you entered 2025, you'd be doing pretty well right now. Bonds have been doing all right, whereas stocks have been very volatile and all over the place, reflecting a lot of the market sentiment that's out there. So, understanding your level of risk aversion and applying that to your portfolio is important in terms of helping to securitize your portfolio to give you the opportunity to earn the best return over time. And that's really kind of that's the core principles of what we coach. And then I walk you through the math and how those elements actually work together. So if you're interested in understanding the statistics behind how all this works, I know, listen, I get it. I've heard it from a number of people over the years. Oh, the academic stuff doesn't work. I've got a secret for you. The reason that a lot of those people will tell you that the academic stuff doesn't work is not because it doesn't work. I've been testing this stuff and running portfolios this way for years. It works. The piece that's missing is that person, even if they have a finance degree sitting across from you, that's not an investor. That's a salesperson. They're selling you on a product. And the reason that they're telling you the academic methods don't work is because they never took the time to learn them or learn how to apply them, which is a lot of what I want to coach you and what I want to teach you and want you to take away from this is how to build good portfolios, how to identify good assets, and then how to manage them over time so that way they're secure and you can build a good return independently and by yourself without having to pay fees, without having to pay management fees, and you can maintain more of that return for yourself. So if that's something that you're interested in, if all of that sounds interesting, I've done my best to break down all the materials in a very easy to understand, relatable way. I'll admit maybe they won't work for everybody, but I've tried to do it in a manner where it's very relatable, it's very easy to understand. That's where a lot of the grading methodology comes into play because it's something that's very familiar to everybody that everybody can relate. So be sure to check it out. My website, portfolioexaminer.com. You can leverage all these methods for free. You can build with our tools and you can have access to up to 50 assets with no obligation. So you can try it out for yourself. You think I'm bullshitting you? Go ahead and go try it for yourself. That's portfolioexaminer.com. Now, if you're interested in the training videos, those are over at portfoliodegree.com. And that's the whole essence of this program is to give you a portfolio degree, really the education that you need in order to properly manage an investment portfolio. And that's without any finance background. You don't need to have a background in finance. In fact, it's probably better if you don't, because not having that background in finance and better understanding how to select assets, guess what? You're going to pick assets and you're going to pick companies that you're interested in. If you always liked Under Armour and you're interested in them, great. Learn how to integrate them to your portfolio. Okay. Because what's going to work for you is different than what's going to work for me, than what's going to work for, this person over here and that person over there. Which is why what I do is I coach a method. I'm not here to tell you, oh, this stock is undervalued, this one is overvalued, here's how you need to run your investments. No, that's not me. I'm here to coach you on what are the core elements behind how to do this. And if that sounds interesting to you, then you can go on over to my YouTube page. You can check out all my free videos. And if you're interested and you want more, go to portfoliodegree.com and sign up for one of our training bundles. You'll get access to everything. Over 7,000 stocks are traded on the New York Stock Exchange and the NASDAQ, and you can unlock all of them on our platforms. Build portfolios. You can compete against me. There's a leaderboard so you can see how I'm doing. Now, I've been posting these daily updates, but if you're curious on how I'm doing on a daily basis, the last few days I haven't been posting them, you can go on out to that website and you can see all of that information there. You can view my portfolio and you can see exactly how it's performing, including when I'm losing. I'm not trying to hide anything from anybody. I am not a super wealthy individual. I have not made millions of dollars leveraging these methods. I've made a few $1,000s over the last few years doing this, but it's a method that is very relatable. It relates to, I used to work in a factory setting, and a big part of why I left that job is because I found a lot of my time was spent talking to engineers, talking direct labor workers, indirect labor workers, just about these methods, and it seemed very relatable to it. So I have made the commitment. This is my life. This is what I'm coaching, and I hope that you decide to join me because I think that this can be really impactful and really make a big difference for how you invest. So I look forward to seeing you over there in our program. Thank you and have a great Friday.